Hi guys, my name is Beth. Welcome back. Happy Wednesday, and let's continue our Forex analysis for swing trading. Okay, guys. So, as you guys already know, let's start with the USD index, and we have the market behaving below the moving average, 89 period moving average. So that means that USD index trend is down, and overall US dollar is weak against other pairs overall. So what does it mean? That means USD index trend is down, and our overall decision is to sell USD. Okay, now let's analyze the forex pairs individually. And USD Japan yen here, and we have USD is strong against the Japan yen because the market is behaving above the moving average, and it's behaving like that. So right, so that means that USD Japan yen trend is up, and overall Japan yen USD is strong against the Japan yen, but USD index pairs say that sell USD. So overall two stories are conflicting, right? So when we have the conflicting story, and we don't have to force any trade, and since it's contradicting, and I'm gonna wait and not gonna trade USD Japan yen. So the contradicts. And USD Canada dollar, again the same story. We have the market behaving above the moving average, the meaning that the dollar is strong against the Canada dollar. But and again, similarly with the USD Japan yen, USD Canada dollar trend is up, USD is strong, but USD index is saying that sell USD, and overall two stories are contradicted. So we're not gonna trade Luni. Okay, USD Shibstar friend, again the same story. We have a nice uptrend like this. The market is retraced, and still market is behaving above the moving average, the meaning that USD is strong against Shibstar franc. Again, conflicting story, and we're not gonna force any trade. Okay, now let's analyze the pound USD. So here we have the nice up leg going up like this, the meaning that a pound is getting stronger against the USD. In other words, USD is getting weaker against the pound, which matches the story the USD index is telling, right? But in this case, this up leg is not really like a size-wise, it's not ideal. So it's not really ideally. I want it to mature more like this, then let it retrace, and let it go into some Fibonacci extension. So here the leg size seems too small. If I compare it into other directional legs, it's just the leg size is just too small, you see, compared to other directional legs. Leg size is too small, the meaning that it could be taken out by the retracements like this, then return into original trend. So we don't want that. So for the pound USD, trend is up, which matches the overall story of USD index, but our leg size is not ideal, it's too small. So decision is not to trade, and we will just wait. Okay, now Euro USD. Here we have the nicely sized beautiful leg like this. USD is getting weaker against the euro. Now it retraces into 0.618 and behaving like this. So it's a good zone to buy a euro. So so one thing to notice is that we have this like a local minimum point around the Fibonacci retracement 0.5. So ideally I wanted to retrace a little bit more into hit Fibonacci retracement 0.5, then in this very beautiful zone I want to buy euro. So ideally it should go up like this and hit Fibonacci extension 1.618. So so for my trading system, for the first bullet, I would buy at the Fibonacci retracement 0.618 for the risking 0.5% my account. Then I will wait another bullet for this local minimum mass stop loss point. So ideally, I would like to have two bullets. So far, I haven't traded because of all the drama in the prop firms in the in US. So basically, all the prop firms are migrating from the MetaTrader platform into some other platform. In my case, my prop firm is moving to DX trade. So because of that, we all have to wait in the United States, and that's why I haven't traded at all in this week. But anyway, I'm still following my schedule and doing my Forex analysis. So ideally, I would have bought at the Fibonacci retracement 0.618, and if the trend hasn't started moving and it retraces back into 0.5 and my prop firm is all the problem is solved, I'll just buy at the 0.5 level. So that's what my analysis for Euro USD. Trend is up, leg size is nice, and I'm waiting for the market to retrace once again around the 0.5 so that I will buy a Euro. If you guys are not in United States, you guys have no problem using MetaTrader 4 and 5, so you guys can continue trade. Okay, now next pair, Aussie. So we have decently sized leg going up like this. Market has retraced back into a good retracement zone here. Currently we have the 5 candles below the moving average. That is still not considered a trend reversal. Actually, it's we're gonna count it as a fake out. So we all know in Forex market, the market likes to fake out, and fake out is a really good opportunity to trade. So again, if my prop firm is fine, everything was fine, and if I'm to trade, I would buy Euro, I would buy Aussie right now. So currently it's around the Fibonacci retracement of 0.38, very good zone to buy right now. Then it should return to original trend and hit some Fibonacci extension like this. So if you guys have an ability to trade right now, I would strongly recommend buying Aussie right now. So right now it's doing the fake out, which is my favorite setup. For Aussie right now, trend is up, market is faking out, leg size is nice, and my decision is if I had the opportunity, I would buy Aussie right now. Okay, New Zealand dollar USD. So the story is similar to Aussie. We have the nice leg size like this. Market is retracing into good zone like this, and currently we have 1, 2, 3, 4, 5, 6 candles behaving below the moving average, which is still considered the fake out, and the market should soon return to original trend like this and go to Fibonacci extension. So little bit caution on the New Zealand dollar USD. I wouldn't say caution, but one thing to keep in mind is that my favorite setup is the market usually retraces into 0.38, then return it, right? So we have currently about 6 candles behaving below the moving average, and if it's still continue to behave like this, then I will take it as a trend reversal. If I witness the more than the 10 candles behaving below moving average, I will take it as a trend reversal. So just keep him in mind, and even though it's right now it's a fake out, and be ready to close attention and close the position if there are 10 candles below the moving average. So let's just keep in mind that. And if I buy right now, I'm expecting this kind of movement, and I'm going to set my stop loss below the 0 point, the local minimum, and my take profit would be Fibonacci extension 1.618. So still New Zealand dollar, Aussie are faking out, and which is a good opportunity to buy those pairs. So I can't wait for my profit migration to be over, and I will if I have to choose, Aussie buy opportunity looks better than New Zealand dollar USD. So even though they are all fake out, I don't like market exceeding the Fibonacci retracement 0.38 for the extended amount of candles. So usually I like the market to fake out few candles, touch 0.38, then it should return to original trend fairly quickly. So for that, my ideal expectation, the Aussie is behaving really nicely. You see, we have 3 and 4 candles. It barely touched the Fibonacci extension of 1.38. Then I expect a quick recovery like this and return to original trend. So my top one recommendation is Aussie, then Euro USD, then I would recommend buying New Zealand dollar USD. Okay. Alright guys, thank you for the attention, and that is my technical analysis for swing trading for Wednesday. Thank you.